Hello, I'm Matt Pierce, Vice President and Senior Portfolio Manager at TrustBank Wealth Management. We're excited to share with you this installment of Chart of the Month. Tariffs have been a central focus of TrustBank's investment committee for several months. We believe tariffs, along with broader fiscal policy, represent the most influential factor shaping market conditions and economic growth over the next year. While there is understandable concern about the inflationary impact of tariffs, we anticipate that their effects will be more concentrated in certain consumer goods rather than broadly inflationary. From our standpoint, other economic indicators, particularly the money supply, play a more significant role in influencing overall price levels and deserve close attention. The most commonly referenced measure of money supply, known as M2, includes cash held in checking and savings accounts, money market funds, and CDs. In short, it reflects the liquid resources readily available for spending. During the COVID-19 pandemic, the federal government injected over $4 trillion in relief to support consumers and businesses, dramatically increasing the money supply. The chart of the month illustrates this expansion in M2 and its correlation with inflation during the pandemic period. Here are some key takeaways. By February 2021, M2 had increased 26% year over year compared to a long-term average of approximately 6%. M2 rose from $15.3 trillion in February 2020 to $21.8 trillion by March 2022. As a result, inflation peaked at 9% year over year in June 2022. And as Milton Friedman said, inflation is caused by too much money chasing too few goods. When paired with supply chain disruptions, the surge in money supply led to a predictable spike in inflation. With today's concerns regarding tariffs, we do not see the risk of widespread inflation as long as the money supply remains stable. Consumers generally have limited resources to spend, so if the price of one category of goods increases due to tariffs, spending in other areas is likely to decline. This differs from the pandemic environment when stimulus payments allowed for elevated spending across multiple categories. However, tariffs do not come without concern. There is potential for economic imbalances as businesses navigate pricing challenges from overseas suppliers. Our concern is that this uncertainty may lead to a reduction in overall spending, which can have further implications for the economy and employment. We are encouraged to see progress on trade agreements and some lessening of early tariff threats, but we continue to monitor the situation closely. At TrustBank, we've taken proactive steps to ensure our clients remain well diversified across markets and asset classes. Our long-term investment strategy is grounded in the belief that thoughtful diversification is key to managing risk and capturing opportunity through all market cycles. To explore your options, contact us today. We look forward to speaking with you soon.